Most new advisors pass CMAP and think, great, I'm a mortgage broker now, but that is not the truth. The reality is you're not a broker until you understand the industry and how it is structured. So that's lenders, brokers, networks, and they all play a different role. And getting this clear now is going to save you years of confusion later. So first, let's talk about the lenders. These are the people who actually provide the money. So the banks, the building societies, or the specialist lenders. And they set the products, the criteria, and ultimately decide whether your client gets the mortgage. Without the lenders, there is no mortgage market at all. Then we have brokers. That's where you come in. Your job is to sit between the client and the lender, matching people to the right product, explaining the risks, and guiding them through the process. The client doesn't deal directly with 20 different banks. They deal with you, and you go and do the legwork. Now, here's the part where most new brokers miss, and that is networks. Now, think of a network like the middle layer between you and the lender. They negotiate deals, set the standards, and most importantly, handle compliance. You can't just wake up one day and give advice. You have to be under a network, or you have to go directly authorized by the FCA. And I'll be honest, if you're a brand new advisor, don't even think about going directly authorized. It's expensive, it's difficult, and it's unforgiving, most importantly. Most advisors should start under a network or with an employer who provides that structure. Now, there are three main broker models you need to understand. You have a tied broker that only sells products from one lender. You'll often find these in banks. You have multi-tied as well, so they have a panel of lenders, maybe 15 to 20. Think of big corporate estate agents. They often use this model. And then you have what is known as representative of whole of market. They have access to almost every lender available to brokers. That is what most independent or self-employed advisors aim for. There isn't a right or wrong here. It really depends on the career path you want. But here is why this matters to you. If you go employed with a corporate, a lot of this structure is handled for you. If you go self-employed, you'll need to actively choose a network and understand their fees, commission splits, and support. So understanding this landscape is step one in deciding which path is right for you. So let's make this a little bit more practical. Write down what appeals to you about being employed, and then write down what appeals to you about being self-employed. Then note down whether you'd prefer tied, multi-tied, or whole of market access. Don't worry about making a final decision today. The goal is to get clarity on what feels right for you right now. Now, in the next lesson, we're going to unpack one of the biggest decisions you'll make early on, and that's whether to go self-employed or employed, and the real pros and cons of each. So just to clarify on the exercises again, I want you to mind map the pros and cons of being employed versus self-employed, and also mind map out the pros and cons of being tied, multi-tied, and whole of market.